Good morning. It's Vijay here. Today is Thursday, 9 January 2025. Welcome to yet another episode of Pre-Market Commentary, where we discuss what happened yesterday and what's likely to happen today. And we take up one topic of interest. Today's topic is the clash of the technicals. There is a debate going on between two technical groups. One is talking of the death cross, and one is talking of the bullish hammer formation in the candlesticks pattern. So let's just try to understand what this is. So now, if what is a death cross? A death cross is a market chart pattern in which a short-term moving average crosses below a long-term moving average, indicating price weakness. So the bears are talking of a death cross, imminent death cross in the indices. It has not yet happened in the major indices, though it has happened in the junior Nifty. So when a 50-day moving average cuts the 200 DMA from the top, then it means that the market is going to weaken. You also have something called a golden cross. Here we will limit our example to a death cross. So this is the blue line, the purple line falling below the yellow line. So that is called a death cross. When the blue line crosses the yellow line from the bottom, then it's called a golden cross. So let's keep our focus to the death cross. Then you have the bullish hammer candlestick. Yesterday, if you look at it, in many indices, India, both Nifty and Bank Nifty and other indices, plus in the US, you had what is called a bullish hammer candlestick. So what is a bullish hammer candlestick is that the closing price is either the opening price or the opening price, closing price, forming a small or no upper shadow. So this is more bullish than this. Both the candlesticks are bullish because what happens is it opens somewhere, then it goes down, then the bulls fight back and close it significantly above the lows of the day. So if the opening price is lower than the closing price, as the here, or the closing price higher than the opening price, that means the bulls have had the strength to take it above the opening, means they're really closed, they're really very strong. In another case, which is also a bullish candlestick, where the opening price has not been broken, but the closing price is closer to the opening price, but significantly away from the lows. So that's what seems to have happened in our market yesterday. So we have not closed at the highs, but our closing price is significantly higher than the opening price. Of the low price. Before we come to that in detail, let's look at it. What happened? Nifty gained 150 points from the low, but closed in red. And mid cap and Nifty small cap were also in red. Pharma was down because of Lupin. There was some inspection, so there was some fear, and that is the reason why Pharma came. Nifty Bank hit a 6-month low. Nifty Bank generally was stronger of the two between Nifty and Bank Nifty, but now suddenly many people are downgrading Indian banks, especially HDFC Bank, and that is why the Nifty Bank hit a 1-month low. PSU banks also are being downgraded. Not downgraded, they are not excited by investing in PSU banks, even though PSU banks like PNB have reported good status report. But we will see when actual results come how the market will behave. Metal closed in the red. The government's PLI scheme seems to have not enthused. And today morning also we may have some problem in the aluminum, because the aluminum, I think Novelis has not reported that good result. Auto has declined. Auto seems to be under pressure. Though Tata Motors did well yesterday, Realty hit 1-month low. Generally, market was very much down. Nifty FMCG, Advanced ITC really came back from its lows of 437. In the US market also, as I said, the markets opened at one point of time. People had given up hope because everything went wrong in the US market. Not only the terms of the stock market indices, the gold climbed up, silver climbed up. Then you had 10-year Treasury yield went to the highest since April of 2024. So people now are thinking inflation is back on the table. So Nifty contributors mainly negative came from HDFC Bank, ICICI Bank, L&T, Trenton, Apollo Hospital. The positive one came from Reliance Industries and TCS and ITC. These were the ones which really held the market up. FIs continue to sell at 3,400 crores approximately. DIs did not buy equivalent to that, so therefore there was some weakness across the board. So let's discuss death cross again. How good it is. See, there are many of the things which people talk of. For instance, if the market falls below 200 EMA, then the market is in bearish territory. I pointed it out in the past that many times, most of the times, if you buy it, if you start buying below 200 EMA, you will invariably make good amount of money. You should not be selling it there. You should be selling not at 200 EMA. You should be selling when the RSI is 80 or something like that, where people begin to buy. So there is a research for this. Fundstrat research talks the S&P 500 index was higher after the death cross, about two-thirds of the time. Two-thirds of the time, if you bought below the, if you bought when the death cross happened, your S&P was higher. Then, but if you look at it, normal times, it was the gain 10%. Here it was only 6%, but still it was up. But if you take recent data, this is data what I'm talking from Fundstrat is from 1926. If you take between 1971 to 22 instances were there where the Nasdaq fell below its 200-day moving average, were followed by where the 50-day moving average of Nasdaq fell below 200-day moving average. That means the death cross was initiated. You had actually fantastic returns. You had 2.6% over next month, 7.2% gain in 3 months, and 12.4 6 months after that. So this is research by Nautilus Research. So it is a very good contrarian indicator, I would say, rather than worry about it. So now where are we on the death cross? In Nifty, 24% of the stocks are in the death cross. Nifty Junior is more badly hit. More than half of them have initiated the death cross. Mid cap is 1/3, and small cap is also 1/3. See, the indexes, they are looking wobbly only recently, but already the death cross has happened. That is, the 50-day moving average has fallen below the 200-day moving average. Pharma, only 10%. IT, none of them are in the death cross. FMCG is 33%, and auto is 20%. So this is as far as the death is concerned. So just let us, I want to share with you what has happened on the indices when in the past. Yeah, here it is. I want to show you on the this one. I just take it here, maybe. Yeah. You see this. This is the blue line is the 50 EMA, and the red line is the 200 EMA. It's almost coming close to that. So let us see. As I said, if you see the previous times where the death cross has happened on Friday, April 2023, if you had sold here, you would have missed the entire rally. So actually, one should have been buying here for only a few days. The market was considered bearish as far as the technicals are concerned, but really it was bullish as far as the price was concerned. The other time it happened was in April 2022. You could have made money for about 1.5 months, but if it actually bought once the death cross had happened, and you got a fantastic rally, you got the low within 2 months, less than 2 months. On June 16th was the Nifty low, and you would have made huge money. You would have a big bull run started from there. Then if you go back further, it happened in Friday of March 2020, almost the bottom. The death cross showed it, and the bottom happened. And then you go to 19 and 18. So every time, the death cross happened, it is a contrarian indicator in India as well as what happened in the US. So I would say you must look forward to a death cross and not worry about too much of the death cross. Now let's look at, about the bullish candlestick. You see, yesterday you had the bullish hammer. So you had the prices going down, and then they bounced back and closed near the open, but in the red, though it closed in the red, but still here it is a bullish hammer. The previous bullish hammer we saw was somewhere here, but and we saw a rally. Yesterday's bullish hammer is more stronger because the bulls pulled it away from the lows. But that doesn't mean next day onwards it will go up. But what it means is bullish. The market people, the smart people, are buying at lower levels. They are not buying on rallies, they are buying on declines. Now, where does this impact the best? It impacts best when the market is falling for a very long time. See, here it does not impact. Here also you got a very good bullish hammer, but it is almost there at the top end, so it doesn't sustain. But if it is at the lower end, here it's sustained. But here we should expect it to sustain. Now let's go back to some other time when we have had bullish hammer. Okay, these are the two instances. I will just show you what happened even in US, for instance. Here we are on US. See, yesterday also we had a bullish hammer. It is actually more bullish because the close was higher than the open. Again, last time we had a bullish hammer on 19th November 2024 on the Dow Jones, and then it took off. Again, as I said, if the fall is there, if there is a significant fall, then the hammer works well. And then if you take here, you see this, September of 2024, again, it was falling for some time, and it hit a new low, broke all the more than a month's lows, and then it bounced back, and then it took off. Then if you go down further, yeah, here was the other one. Yeah, this one. So there are such instances where, if there is a long downtrend and you find a bullish hammer, generally that is bullish. So we have to see what happens. But what I want to conclude here is the death cross not worked. In fact, death cross is a contrary indicator, and a bullish hammer, if it comes after a long downtrend, it is very good for the market. Today, the US markets are closed because of in memoriam of memory of the late President Carter. So we only have our markets to contend with. We also have the weekly expiry, so you can expect volatility. I think bears will come charging in the beginning because Nikkei is down, Hang Seng is struggling, Singapore is down, Kospi is struggling. So you will see probably a opening gap down, but I think bulls may fight back based on what happened yesterday. So whatever you do today, I hope, it will be successful. What I am doing is, I am again cautiously bullish. Yesterday we were bullish. In the morning we were able to get good gains and we closed our positions well before the first half of the day. My mentees know that. I put my trades on the Telegram group and Market Mirror mentees, and we had a reasonably good day yesterday. Again, I will buy on declines today because the technical indicators tell me that I should buy. Fundamentally, before budget, generally things are good. So I would like to, as I reiterate, I am bullish till budget at least. We will worry about it after that, whether the budget is good. If it is good, then one can become more bullish. If it is not good, then one has to change your stance. But right now, we go with a positive frame of mind. Whatever you do today, hope it is successful. Thank you for joining me.